Good morning, everyone. I didn't want to say hey, everyone, because I got reamed for it on the comments before. And you know what? Honestly, I always do a check. I don't listen to my videos. I don't edit my videos, but I do make sure the audio works at least. And I was listening to my last video that, I said, hey, everyone. And I was like, all right, I can't even listen to this. So it is annoying. So I'm going to try not to do an intro like that. I got to think of something maybe more creative, but, like, welcome to the Retire on Dividends channel, maybe that. But anyway, so I want to talk about KLIP, and the reason is I did a previous video on KLIP, but that was earlier when I'll say I wasn't doing as much research as I am now on these covered call ETFs. And at the time, I'm not even sure. I had bought it in my Roth right before I decided to, do the taxable plan, buy all of these funds, my taxable. So I ended up just selling everything from my Roth to, move it over to the taxable. And I never bought KLIP back. And I just wasn't ready. I didn't, feel comfortable because I was slowly buying into the funds that I understand. And Yield Max, I was really digging into, and I understand what their strategy was. So I felt comfortable buying, any Yield Max fund where I appreciate the underlying stock, like where I would, want to own the underlying stock. So that being said, as far as KLIP goes, I never did the too much research until yesterday, of course. I always thought they sold covered calls at the money. So I was like, all right, that's very, very limited upside. So I didn't want to get into that. Not to mention they invest in a China ETF, and I'm not as familiar with China tech companies. So, it's good to have different exposure, like internationally, especially with these covered call ETFs. But, that was one of the, deciding factors at the time. So anyway, let's get into it. I have the KLIP website up. Kraneshares is, they're essentially the fund manager, the main company that, runs KLIP, right? So KLIP, what it's called is Kraneshare China Internet and Covered Call Strategy ETF. So again, if you're a Yield Max guy, think of it like Yield Max, except they sell covered calls on an ETF instead of an underlying stock. So the website is very weird, very kind of shady, like things pop up and things don't work right. So I don't want to spend too much time on the website, but again, I go on the website because that's where you should start off. I'm going to, teach everyone to start with the actual fund website. You shouldn't trust anything else, right? Including YouTubers, right? Which reminds me, I'm not a financial advisor. I'm just a YouTuber making this video for fun and entertainment. So do your own research, as you should. So anyway, I just wanted to, mention that you should really start with the company's website instead of going to Seeking Alpha, Yahoo Finance, because, those are just biased articles that may or may not be right. But anyway, so this is where, you can get the information on KLIP. So what are they about? Again, they covered call strategy, ETF, blah, blah, blah. They sell covered calls on KWeb, which is a China internet ETF. Okay, great. What else? Blah, blah, blah. Nothing, monthly distributions. Nothing exciting here. Okay, here we go. We caught our eye, right? Look at that. 57.9% yield, which is ridiculous. I mean, it is. It's ridiculous. But it's awesome. They distribute, again, monthly. So this, sticks out. Great. They pay 57% annually. This is in line with Tesla right now and in line with NVIDIA. I think Tesla is going to go back to 60, 70%, by the way, after this month. But anyway, let's keep going. What else? Ticker is KLIP, primary exchange, New York Stock Exchange, net assets, 89 million. They're a pretty established fund. They've been out since January. Total fund operating expense 0.95%. NAV 1753. Market price 1761. Pretty close. Performance history. We'll get into that. Distribution history. Let's see. Okay, they started in January. Obviously, they started, probably the middle of January. 56 cents, $1.16 next month, $1.09 next month, $1.03 the following, 86, 83 cents, 83 cents, 83 cents. So, kind of consistent. No massive cuts like we see on Tesla. So, if it's $1 or 83 cents every month, that's good. That's a win. Here's just some tweets. I'm not going to get into that. Growth of 10,000. Who cares? Top 10 holdings. I will get into that. But first, I want to go through the prospectus. My favorite thing to do. Very important. So this is the bottom of the website. So anyway, the main prospectus was not working for me. Again, back to being this website being funky. I saved the prospectus and I couldn't highlight things. So I'm using the summary prospectus, which, lucky for you, I saved it and I highlighted the important things, which, as always, I will save it on my Discord under the files channel. So if you would like to see the highlighted version, please come join my Discord and, take it, read it up. So this prospectus is as of August 1st, 23. So unlike Yield Max, at least it's kind of current. So what do they do? What do we care about? They seek to provide current income. Okay, obviously, right? This one doesn't say they seek to follow the KWeb, market price like the other ones do. Management fees are actually 0.25%. However, there's acquired fund fees and expenses, 0.69%. So the total annual fund expense is 0.95%. So the 0.69, what is that, right? That's because they actually own the underlying stock, which the underlying stock is KWeb. And if you go to KWeb, they are actually owned by Kraneshares. So is this a conflict of interest? I don't know. But it's they sell covered calls on their own ETF. And I just want to show you here. See, here's the 0.69%. So since they own the ETF that they're selling covered calls on, they have to pay the expense for it. And if they own, say, only 80% of their portfolio is into that fund, then obviously it's not always going to be 0.95% on everything. So, and acquired fund fees, that was a new one for me, so I just highlighted that. I just went over what it is. So, anyway, so the fund invests at least 80% of its net assets into securities such as KWeb. Okay. They also use the flexible exchange, which is the European style exchange, which is, the good part about this is you cannot be assigned early on the covered calls. I'm sure there's other benefits, but that's the main one. Each flex option will generally have an expiration date greater than 30 days. This is different from Yield Max, which is usually 1 week. Okay. As I mentioned, only subject to exercise on expiration date. This is important. When the index, meaning KWeb, is rallying rapidly, the fund is expected to underperform the index. And this is because they sell covered calls. So that covered call strike price is your cap. That is the limit. So you hope there's no massive bull run on these. The index is designed to measure the equity market performance of investable public trade China-based companies. So again, they sell covered calls on KWeb. KWeb invests in China-based companies, basically internet-related sectors. So that's more volatile, which is why they get that 57% annually. The index provider defines China-based companies as those that are incorporated in the mainland of China, have their headquarters mainland in China, and derive at least 50% of the revenue, good services, whatever, in mainland China. So these are China companies, obviously. China internet companies include, but are not limited to, companies that develop and market internet software and or provide internet services. So the summary of that is KWeb invests in China. The index excludes securities that during the past year had a daily average trading value of less than 3 million on daily average market cap of less than 2 billion. So they don't invest in smaller companies. I like that. No constituent exceeds 10% at each rebalance, with the top 5 constituents capped at 40%. I like that. The fund may invest up to 20% of its assets in instruments. This is the other 20%. They can invest in other things, including swaps, futures, forwards, structures, notes, whatever, which obviously great. Okay, make us more money on the side. I don't know what they're, when I looked at the holdings, I didn't really see anything, but we'll take a look at that in a second. The investment companies in which the fund will invest may be advised, sponsored, or otherwise serviced by Crane or the affiliates. Okay, obviously. As of May 31st, the index was comprised of 32 securities, so that's pretty diversified. I don't like this. They're mainly in the communications sector, 42% of it, and then consumer discretionary is 37%. So they're not heavily diversified by sector, but again, some of those other sectors may not be as volatile, which may not make an attractive yield. That's it. Everything else in the summary prospectus is definitions. So if you don't know what the definitions are, you can, go to that. All right. So what are the holdings? What are they investing my money in? So as you can see, there's a lot of holdings. So let's get into it. These are the holdings, right? 98% is in KWeb. 4% cash. So obviously the I can't have 102%, but there's options contracts in there in the negative. But anyway, so let's look at this in a cleaner way. Yes, my Excel spreadsheet. So I took this, I threw it in Excel, and it looks like there are, 16 covered calls right now. 16. So if you look at KWeb, their current price is $27.51. So they're selling covered calls. Let's look at the strike prices. There's one below the current price, and everything else is pretty much either at or above the current price. And I like that. Again, they're taking advantage of some capital gains. So if you look, okay, what's the highest one? 2971, 5,800 shares. Okay, I like it. I like it a lot. 29.20. 465. Okay. So a lot of the strike prices are at or above. There's one that's below. Okay, so that's looking good. And what's the strike price? $9.29. What is that? That's this Friday? Yeah, that's this Friday. 10/6. The next Friday, 10/13. So yeah, it's about a week to a month out in expiration. Awesome. What else? So just wanted to show you guys shares held is 36,000. Oh, I'm sorry. Contracts. It says shares held, but it's contracts, 36,269, which converts, times 100, converts to 3.6 million shares, which matches to what they're holding up here, 3.6 million. Makes sense, right? And everything else is cash. So to me, the holdings make sense. I like their strategy. Everything looks pretty good. Now, how's this fund doing? I think we saw the payouts already, but if we go to marketwatch.com and we look at KLIP, let's just look at they launched this year. Their year to date, this is not looking too great. They started around 25. They're down to like $17 now. So they're on the downward spiral here. Could be because of KWeb, could be because of the distributions, but probably mainly because of KWeb. So let's take a look how KWeb is doing year to date. And, from 30, a little above 35, now they're about 27. Not the same type of decline, but again, these little jumps here, this jump, this doesn't even highlight. All right, I did like this website. Now you can't even highlight the chart. But anyway, these rapid jumps are not good for covered call ETFs. So obviously, you could lose more money on KLIP than you can on KWeb. However, this is not, the KLIP chart is not including distributions. If you look at their distributions, again, they're paying around $1 per month. So if you say 2, 4, 6, 7 months, that's, $7 per share overall. So that's pretty good. That is KLIP in a nutshell. Again, I hope these videos help you to do, at least know where to go to do your own research, or help you to make a good financial decision of what you guys want to do. Me personally, I do not own KLIP at the moment, but after doing this research yesterday and talking about it today, I do like their strategy. So I feel like I'm going to dollar cost average in starting this week, to eventually have a small position and slowly further diversify my high risk, high reward taxable brokerage portfolio. So again, I'm going to add 5 to 10 shares and then go from there, right? I'm not going to buy chunks. That's how you get burnt. Like I did on Tesla. And of course, Friday, I could not control myself. Tesla was at 13 something. It's like 13.30. I'm like, oh my God. And I bought 100 more, like a jackass. But I don't know. I couldn't help myself. I wanted to get my cost basis below 15. Of course, it's at like 15.07. I'm so close. But at the same time, I'm doing things I should not be doing. I should be not allocating more towards Tesla, but other stocks, other ETFs, such as KLIP, such as QQQY, such as JEPY, JEPY, and others. Again, going forward, as I, learn about other funds, I will do the research and I will share everything I know and let you guys know what I'm doing. And as I learn more about the funds, I will make an updated video just like I did on KLIP. So I hope you guys enjoy this type of content. Again, I'm no financial advisor. I'm just a guy on YouTube having fun, making videos, hopefully speaking the same language as, most people. And hopefully you guys can learn a thing or two. But if you guys enjoyed this video, let me know, because believe me, I go off of the comments, right? I go off of what people say, whether in the comments or in the Discord. I do read all of them. I try to respond to all of them. Some of the negative ones there's no point in responding to. So, but some of the negative ones I do respond to because they're, good criticisms. So, but that's it. I got to go to work, guys. So I'll talk to you later.